Welcome, kids, to episode 1 of Stories from Reddit. Now, in today's episode, we're going to touch on a very, very fresh post posted by Profile Normal 4402. So the guy is asking, how long would it take for anyone to scale up to 80K with a 2K account? I'm not exactly sure why 80K, why that would be the final goal. Maybe he's buying a Porsche or something. I don't know. And as soon as we scroll down to the comment section, we see a couple of very, very interesting replies. One of them saying, with perfect future prediction one day, which is obviously fairly true. But then the guy goes on and says, in reality, with perfect conditions and someone who has perfect financial and trading knowledge and starts with a fresh 2K account, you're looking at many months, even longer than a year. The answer you're looking for is somewhere in between. Now, all of that is complete bullshit, right? Anyone with half a brain cell regarding trading already knows that that's complete and utter bullshit. I even went as far as commenting or giving a reply to that comment. Why would this guy share advice on something he clearly has zero knowledge about? And what exactly do I mean by that? In trading, you have to consider a certain level of realism, right? And this guy obviously doesn't have any. If you start off with a fresh 2K account, or not fresh 2K account, whatever, let's just say you have $2,000 in capital and you want to turn that money into 80 grand. Now, there's going to be people saying, oh, but that's easy, right? You just take 50 trades per day, you risk 30, 40, 50% of your capital per trade, and you're just making a shit ton of money, right? But sadly, that's just not how trading works. That's just not how any business really works. Because if you could take $2,000 and take on risk of that size, considering you'd be taking 30, 40, or 50% risk per trade, and you would actually manage to, make a consistent income, why would anybody literally go to work or, invest money someplace else if this is something as easy as that? You're basically gambling at this point. You don't know with certainty if your next trade is going to be a winner, is going to be a loser, right? So that's why we manage risk. And if you want to take a 2K account and you want to flip it to 80 grand, taking 50% risk per trade is just not going to work. Even 30% risk per trade is not going to work. Even 20% risk per trade is not going to take you far. There has to be a very, very strict mathematical system behind trading for, trading to bring in money, because otherwise you're basically gambling. You could easily lose 1, 2, 3, 4, maybe even 5 trades in a row with any decent trading system. Trading 1 to 2 earners to reward 50% win rate. Within the next 100 or 1,000 trades, you're going to lose a lot more than 5 trades in a row, actually. So taking on extensive risk like 30, 40, 50% per trade is just not going to work. You're going to blow the account. You're going to lose the money. And I don't know, if you have capital issues, that just doesn't sound like a good idea. Okay, so now that you understand that account flipping is not a real thing, is not a real trading system, strategy, whatever, how do you actually make 80 grand from a 2K deposit? It's actually very, very simple. Number one, you have to know how to trade. That's going to be the preposition. And you're going to be like, oh, but this guy already said, and considering if you have perfect conditions, and if you're someone who has perfect financial and trading knowledge, yes, that's good, and that's cool, right? But still, you're not going to flip accounts. Okay, so you have to know how to trade, and you have to have a very, very good system in place, right? You need data on your system. You need expectancy data on your system. You need a very good risk module. And let's take, for example, that you would trade 1% risk per trade. You have a 45%, or let's say a 50% win rate, just for the sake of the argument. And you will take, 1,000 trades. Let me do a little bit of calculating before we go on, just so I have the numbers set up here. Well, in this very specific example, over 1,000 trades, you're making about $10,000 in profit, considering you do not increase your risk size at any point in time, right? So even when you'd be at 5,000, in balance, you would still keep 1% risk per trade. And on a $2,000 account, that would be $20 per trade. So in 1,000 trades, you're making around $10,000 profit. But of course, that's not, exactly guaranteed. This is just an example of a trading system, how trading system performs with time. Of course, with compounding, things go a little bit differently. You'd make exponentially more money. And that's the next thing I want to talk about, compounding. If you not only compound, risk more money as your balance grows, but also deposit money as your balance grows. You work a job, you sell stuff you don't need, you cut back on expenses. Basically, you deposit more money every single week, every single month, blah, 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 next to making gains on that account and next to increasing the risk size as your capital grows. You're making, again, exponentially more money than you would if you would just, keep risking the same amount per trade with the same capital size. But the main problem here is that taking 1,000 trades would take you, 5 years, 10 years, maybe more, right? This isn't, just sit down at a computer and click buy and sell however you feel like, just bumping up those numbers, just trading. It doesn't really work like that, right? Any serious trader, any serious business owner, participating in the markets is going to tell you exactly the same thing, right? Yes, some traders, are a little bit higher frequency, but the variance in those systems is also a little bit higher. There's going to be larger drawdown periods. There's going to be larger winning streaks, losing streaks, all of that good stuff, right? So, I'm just kind of explaining this based on a middle ground example, right? If you're trading a normal frequency, 10, 20, 30 trades per month, something like that, and that would mean you're doing 100 upwards to 300 trades per year, which would already be on a very, very aggressive side, considering the swaps, considering the commissions, considering all of that extra cost and time invested. So you would take 3 years to do 1,000 trades. If you're doing 300 trades per year, we would do 3.5 years to take 1,000 trades and to make, what is that, 500 R in profit. If, statistics would allow you to do that, right? I doubt you could do a very good win rate, 50% win rate with 1 to 2 win risk to reward with the frequency that high. But, challenge me, prove me wrong, do it, show me. I can't do it. I'll admit that publicly any day of the week, any hour of the day. I cannot do 500 R in 3 years. No way. So just to recap things a little bit, again, if you want to make gains with trading, you have to take a realistic approach. You have to understand what you're risking. You have to understand what you're expecting. And you have to understand how this is a probability game where you gain, returns over a larger sample of positions with positive expectancy, of course, assuming you're a good trader. That's how this works. That's just not, casino. This is not Vegas. You don't step into the markets. You have $2,000. You don't just click buy, open 10 lots on whatever pair or asset, and you just expect millions of dollars or 80 grand in return or whatever. So anyone who's selling you otherwise is either a liar, not educated, or simply just ignorant. Like and subscribe.